So we will see a mass market going into silver and a speculation which will be much even bigger than the Hunt brothers in the late 1970s and up to 1980, when silver went from virtually a couple of dollars to $50. Then, of course, it went down dramatically. This time we have an underlying industrial demand of a magnitude that the world has never seen before. So this is why silver will be going up for a much longer period and much faster than it did in the late 1980s. So silver will go up 2-3 times as fast, at least as gold.
Legendary investor Egon von Greyerz has spent years warning that the foundation of the global financial system is breaking apart. His latest outlook makes the shift impossible to ignore. Control over precious metals is no longer in Western hands. The power has moved east, and that is reshaping the entire market. For decades, Wall Street and London ruled the trade, but today it's Asia that drives demand. In the East, gold is not just an asset. It's insurance against crisis and instability. China recently took a historic step by allowing its enormous insurance funds to allocate capital into gold. That decision alone has unleashed a new surge of institutional buying into a market already stretched for supply. At the same time, India continues its centuries-old tradition of buying physical gold. From festivals to weddings, cultural and seasonal demand guarantees a steady flow of consumption that doesn't slow down. Together, these two giants have created a floor under the gold market that the West can no longer influence the way it once did. But there's a second story emerging here, one that is even more explosive. While gold remains the ultimate bedrock of financial security, silver is rapidly becoming the most undervalued opportunity of this generation. Silver stands apart because of its dual nature. On the one hand, it shares gold's safe haven qualities. On the other, it is essential to the technologies that define the future. Think about it. Solar panels, electric vehicles, advanced electronics, energy storage. Every one of these industries consumes massive amounts of silver. Global demand is rising so quickly that mining production can't keep up. Add China's aggressive industrial expansion and its full-speed push into renewable energy, and you have the largest single consumer of silver in history, straining an already tight supply chain. This is why silver has always shown a pattern of explosive moves once momentum takes hold. In bull markets, it often outperforms gold by a wide margin in percentage gains. For today's investors, that creates a rare window. We are entering a period where the traditional roles of gold and silver are expanding into something far more significant. Gold is evolving from a simple hedge into a global benchmark for security and trust, now dictated by Eastern demand rather than Western policymakers. Silver, by contrast, is standing at the crossroads of financial refuge and industrial necessity. That gives it a unique advantage in today's rapidly changing economy, an advantage that could redefine wealth for an entire generation. This convergence doesn't just suggest owning precious metals for protection. It points to a once-in-a-lifetime chance to capture opportunity in the middle of systemic change. Holding gold and silver is no longer optional. It's essential. And now, we'll show you the key clips from Egon von Greyerz' interview. Before we dive in, don't forget to subscribe and hit the bell icon so you never miss timely updates as this financial transformation unfolds.
Now, we've been saying this now for a few years, you and I, and especially since the US and therefore the EU always follows the US, whatever they say. The EU and the US confiscated the Russian assets held in dollars around the world. Now, it is obvious that the Eastern banks and the BRICS central banks are not any longer going to hold dollars within the global monetary system or banking system or central banks. That's why we're going to see a gradual shift here from dollar assets as reserves for central banks into gold and silver. Now people are starting to realize that silver is also incredibly important. Remember that silver is more than 80 times less in price to gold. So silver is often called poor man's gold. So a lot of people who can't afford to buy gold will buy silver. So we will see a mass market going into silver and a speculation which will be much even bigger than the Hunt brothers in the late 1970s and up to 1980, when silver went from virtually a couple of dollars to $50. Then, of course, it went down dramatically. This time we have an underlying industrial demand of a magnitude that the world has never seen before. So this is why silver will be going up for a much longer period and much faster than it did in the late 1980s. So silver will go up 2-3 times as fast, at least as gold. But remember, silver is very, very volatile. So holding just silver is, in our view, dangerous. You could maybe hold silver 25-30% of your total precious metals holdings, but hold gold also, because it's much more stable than silver is. But the upside in silver, speculative upside, is enormous today. Now, compared to money supply, monetary basis, whatever you compare it to, gold is extremely undervalued today, and we will see it overshooting. And of course, the monetary base, remember, or the money supply, will grow exponentially in coming years because of the amount of money printing required to satisfy the deficit spending of most governments, especially Western governments. And that, of course, gold will follow. So, the gold is the only money that has survived in history. We emphasize that time and time again, and why is gold the only kind of money that has survived? Because it's the only money that's produced by nature, and therefore it can't be manipulated, the physical gold side, and it can't be manufactured. And all other currencies are man-made, and gold, as I said, is nature's money. And this is why we will see gold as the only instrument that over time will maintain its purchasing power like it has done for thousands of years. More important than ever today, please hold some gold for your own protection and insurance, and for your family, or for your company, or for your investment portfolio. And also hold some silver, because you see tremendous potential there. But hold it outside the banking system, in a safe jurisdiction, preferably outside the country where you live. It's very important, so that you can actually reach your goal if a country wants to confiscate it in the country where you live. But Jan, so we talk about India here, and of course they are, as a people on the whole, all Indians hold gold. And here we're looking at now institutional money also moving into gold because of the change of rules. The same is happening in China. China is now talking about first 1% for insurers into gold will be allowed, and that is most probably going to increase to 5%. And when these massive countries put major amounts of money into gold, we are going to see a massive demand that, as I have repeated many times, cannot be met by physical gold at today's prices. So, because there is not enough gold in the world to deliver to all of the buyers that are now going to look for gold. So the only way that they can get gold is to pay higher prices. And we are going to see, as I said many times, gold going up by multiples from here. I repeat, going up by multiples. The world doesn't realize that, and the gold has been now going sideways since April, really. From the beginning of April, gold has been going sideways. The next move is imminent, in my view. Whether imminent is tomorrow or in a week or in a month, it's irrelevant. But we have now seen a consolidation of over 4 months, and the next move is very near. So that's why, as we've been saying since 2000, hold gold for wealth preservation. We went into it at $300, is now $3,500, and we're going to see gold going up to much, much higher levels. And now is the time, if you haven't got it already, to hold physical gold outside the banking system, obviously, because it is still today, even though the increase has been very high, Jan, for as I said, over 10 times in the last 25 years, that's just the beginning in my view. We're going to see a much, much higher gold price. And it's not because I'm a gold bull, it's only because the world's currencies are continuing their drop to zero, and that will be reflected obviously in the gold price.
Back in 2021, the global financial system hit a decisive turning point. Long-term interest rates collapsed to their lowest levels in history, signaling the end of one era and the start of a new structural shift. What followed wasn't just another cycle, it was the beginning of a multi-decade trend. We are now in a world of persistently higher rates, deeply entrenched inflation, weakening fiat currencies, and the return of precious metals to center stage. Central banks may tinker with short-term rates, but those moves are cosmetic. The bigger picture is locked in: expanding fiscal deficits, endless money printing, and inflationary forces that are so deeply embedded, there's almost no path to reversal. Debt burdens are already unsustainable. As interest rates climb, confidence in sovereign credit will erode steadily. Bondholders won't necessarily see outright defaults, but they will suffer losses through the slow grind of currency debasement and devaluation. And the fallout won't be limited to bonds. Equities, bonds, and real estate, the classic pillars of wealth, are becoming increasingly fragile. Stock markets, in particular, now face the very real risk of historic declines capable of wiping out huge portions of global capital. A correction of this magnitude would change everything: the distribution of wealth, the stability of institutions, and the financial security of ordinary people. Amidst this reordering, one safe haven stands resilient. Precious metals, gold and silver, carry a strength that fiat systems cannot replicate. Grounded in scarcity and intrinsic value, they remain immune to policy blunders and the loss of trust in paper currencies. In a world of accelerating instability, gold and silver rise above as the ultimate stores of value.
Since 2021, when the long-term fall in interest rates bottomed, I've been very clear that we are now starting certainly a 20, 30-year cycle up of interest rates, higher inflation, higher interest rates, and of course falling currencies and rising precious metals. If they decrease their short-term rates for a while, once or twice, it has no significance. The long-term rates are telling us what is happening in the market, and it's much more difficult to control the long-term rates. And they're going up, and they are going to, I've said that for a long, long time, 10, 15 years at least, that the long rates will pull up the short rates. Because with the deficits, with the inflation we have, and with the money printing we have, it is not possible over time to control long-term rates or inflation. So we're going to see much higher rates, whatever the short-term moves are. We should not worry about that. The rates are in a long-term uptrend, and inflation also. And you can never print unlimited amounts of money and have zero inflation. It just doesn't add up. So yes, higher rates, and that's of course what very few governments can cope with the amount of borrowings they have and the amount of deficits they have, which are increasing the borrowings. So it's going to be, I think many government bonds will actually fail, and countries will default. They won't call it a default. They will just print more money and be automatic devaluations. But in effect, it will be a default because currencies have to go to zero, as we always expect in every monetary era. I think what markets are in for a major turn, a long-term downturn in stock prices and stock valuations. Whether it starts like it often does in September and then accelerates in October, or it takes a little bit longer, it's irrelevant. To be in the stock market now is extremely high risk, and once this fall starts, it's going to lead to, in my view, at least in relation to gold, it will probably be a 95% fall of stock markets, but also in absolute terms, it will probably be at least a 75% fall of the stock market. So that we are looking at a massive wealth destruction taking place now. You think about stock markets falling, bond prices falling, and property prices falling. The rich will be much, much less richer in coming years, and they're not prepared for it. They are not prepared for the total fall in their net worth and in the value of their assets. And that's going to lead a totally different wealth distribution in the world.
The financial landscape is entering a decisive turning point. Rising interest rates, ballooning debt, and weakening currencies are setting the stage for precious metals to reclaim their historic role as protectors of wealth. Gold remains the foundation of stability, trusted for centuries as the ultimate hedge. Silver, however, carries a dual identity, both a monetary asset and an essential industrial metal. That makes its upside even greater as global demand accelerates against tightening supply. In today's environment, where equities, bonds, and property are struggling to provide reliable security, the strategic importance of gold and silver has never been more obvious. The coming years could not only reaffirm their relevance, but elevate them to the very front line of financial resilience. The real question is whether these age-old havens will continue to dominate, or if new challengers might emerge in a rapidly changing global order. But now, we want to hear from you. Let's put it to a quick poll in the comments. Where do you think silver will be trading in the next 2 years? 1. $50 an ounce, history repeats itself. 2. $100 an ounce, a powerful breakout. 3. Over $200 an ounce, a generational revaluation. 4. Under $30 an ounce, just hype, no real breakout. Which one do you believe, and why? Share your pick in the comments below. We'll be following closely to see which answer our community gets right. If you enjoyed this video and want to stay ahead of these shifts, don't forget to like, subscribe, and turn on notifications so you never miss timely updates. Thanks for watching, and we'll see you in the next video.